Imagine a company that started with the simple goal of making stock trading more accessible and affordable in India, and in just over a decade, turned into a billion-dollar giant. Zerodha, founded by Nitin Kamath, is now one of the most influential players in India's financial ecosystem, boasting 8,320 Indian rupees crore in revenue and 4,700 Indian rupees crore in profit. But with increasing regulatory challenges, how will Zerodha navigate its future? Today, we'll explore Zerodha's journey, from its disruptive start to its rise as a market leader and the challenges it now faces. Welcome to the AI Lib. Zerodha's story begins in 2010, when Nitin Kamath, a professional trader, noticed how difficult and expensive it was for retail investors to participate in the stock market. The brokerage industry in India was dominated by traditional brokers who charged percentage-based commissions, making it nearly impossible for smaller traders to enter and exit the market without incurring heavy costs. Kamath saw an opportunity to simplify the process and make it more affordable. Thus, Zerodha was born. The name Zerodha itself is a fusion of zero and rhoda, which means barriers in Sanskrit, symbolizing the company's goal of removing obstacles for retail traders. At its core, Zerodha aimed to democratize trading by introducing a flat fee structure, 20 Indian rupees per trade, regardless of the transaction size. This move was revolutionary at a time when brokers were charging anywhere from 0.3% to 0.5% of the trade amount. Zerodha's flat fee model made trading more predictable and affordable, especially for high-volume traders who were previously burdened by exorbitant fees. In its early days, Zerodha faced skepticism. Established brokers viewed the flat fee model as unsustainable, and many questioned whether the company could survive in an industry where commissions were the primary revenue stream. But Kamath's vision was clear. He believed that by leveraging technology and focusing on scale, Zerodha could thrive with lower margins. His belief paid off as retail traders began flocking to Zerodha's platform, appreciating the cost savings and the transparent fee structure. What really set Zerodha apart was its commitment to making financial markets accessible to everyone, not just seasoned traders. Kamath believed that the Indian market was ripe for change, but it required an understanding of the technological shifts taking place. With the increasing use of smartphones and internet penetration, more Indians were gaining access to the digital world. Zerodha leveraged this trend, offering a seamless online trading experience through its digital platform. By combining low fees with cutting-edge technology, Zerodha's early years were marked by steady growth. Customers appreciated the transparency, the ease of use, and the fact that they were not losing a significant portion of their profits to brokerage commissions. Zerodha's success was not just about pricing, it was about trust. Kamath knew that if he could build a platform that traders trusted, word of mouth would do the rest. Over the next few years, that's exactly what happened. The flat fee model introduced by Zerodha was a revolutionary move that completely transformed the Indian brokerage industry. Before Zerodha, brokers traditionally charged a percentage-based commission on trades, which meant that the more money a person invested, the higher the fees they paid. This model was especially punishing for retail traders who wanted to trade frequently or in large volumes. Zerodha's decision to implement a flat 20 Indian rupees fee per trade, regardless of the transaction size, was a breath of fresh air for the market. This change significantly lowered the cost of trading for millions of people. For high-volume traders, in particular, the savings were substantial, making Zerodha an instant favorite among this demographic. The flat fee structure also made costs more predictable for all users, removing the anxiety that came with calculating fees based on percentages. Zerodha's focus on affordability allowed more people to enter the stock market, leveling the playing field for retail traders who previously found trading too expensive. Zerodha's impact on the industry wasn't limited to pricing. The company also introduced a level of transparency that had been sorely missing in the brokerage world. While many brokers relied on hidden fees and complicated pricing structures, Zerodha made its fees simple and easy to understand. This transparency helped build trust with its clients, further solidifying its reputation as a customer-first brokerage. Another key factor in Zerodha's success was its use of technology. The company invested heavily in its digital infrastructure, developing Kite as a state-of-the-art trading platform. Kite was not only fast and reliable, but also intuitive, making it accessible to both novice and experienced traders. The platform's mobile compatibility allowed users to trade on the go, further widening Zerodha's appeal in a country where smartphone usage was rapidly growing. By offering low-cost trading and a seamless digital experience, Zerodha was able to attract millions of new investors to the stock market. Its innovative business model forced traditional brokers to rethink their fee structures and led to a wave of industry changes. Many competitors eventually adopted similar flat fee models, but Zerodha remained the leader thanks to its first-mover advantage and commitment to continuous improvement. While Zerodha's disruptive pricing model reshaped India's brokerage landscape, it was the company's technological innovation that truly solidified its position as the market leader. Central to Zerodha's success is Kite, the company's proprietary trading platform launched in 2015. Kite was designed in response to the inadequacies of existing trading platforms at the time, which were often cumbersome, outdated, and slow, hindering users' ability to trade effectively. Kite's launch marked a paradigm shift in how trading platforms could, and should, operate. Built in-house by Zerodha's development team, it combined a sleek, intuitive interface with powerful functionality. For the first time, Indian traders could access real-time data, perform advanced charting, and execute trades all from a single, easy-to-use platform. Its mobile-friendly design was a game-changer in a market where the number of smartphone users was growing exponentially. This ensured that users could trade on the go without the platform lagging, a crucial feature for those relying on quick execution to capitalize on market movements. One of Kite's standout features is its lightning-fast execution. In a market where even a fraction of a second can make a difference in profit or loss, Zerodha ensured that trades on Kite were executed as quickly as possible, reducing slippage for its users. Additionally, Kite's integration with Zerodha's backend systems meant that the platform could easily scale to handle millions of trades daily, ensuring stability even during high market volatility. Zerodha's commitment to building a strong technological foundation extended beyond Kite. The company introduced APIs, application programming interfaces, that allowed third-party developers to build customized applications and tools that could integrate directly with Zerodha's ecosystem. This move fostered a thriving community of fintech developers who created everything from trading bots to portfolio management tools that plugged into Kite's infrastructure, enhancing the trading experience for many users. Zerodha also focused on creating a seamless multi-platform experience. Kite was built to work just as well on desktops as it did on mobile devices. For retail traders and professional investors alike, this offered unmatched flexibility. Additionally, features like dark mode, customizable market watch lists, and real-time global market data made Kite a comprehensive tool for traders of all experience levels. But Kite was just one part of Zerodha's broader technological ecosystem. The company also developed Console, its reporting and analytics platform, which provided traders with detailed insights into their trading history, performance metrics, and tax-related information. By simplifying complex data into digestible formats, Console helped users make more informed trading decisions, positioning Zerodha as more than just a brokerage, but as a partner in its clients' financial journeys. Beyond trading platforms, Zerodha invested heavily in back-end infrastructure to ensure that its systems could support growing demand. The company's servers were built to handle huge spikes in traffic, such as those seen during major market events or IPOs, minimizing downtime and ensuring that users always had access to the platform. This focus on reliability and uptime distinguished Zerodha from other brokers, many of whom struggled to maintain stability during high-volume periods. The integration of Raymatter, Zerodha's fintech incubator, also highlights the company's forward-thinking approach to technology. By fostering innovation within the fintech ecosystem, Raymatter helped launch startups that further enhanced Zerodha's offerings, from algorithmic trading solutions to portfolio management tools. This ecosystem approach allowed Zerodha to stay ahead of industry trends and quickly adopt new technologies that benefited its users. As of 2024, Kite and the broader Zerodha ecosystem have become indispensable tools for millions of traders across India. Zerodha's ability to continually improve its technology has not only attracted new users but also fostered long-term loyalty among its customer base. By focusing on innovation, user experience, and scalability, Zerodha ensured that its technological infrastructure would be a cornerstone of its success for years to come. One of the unique aspects of Zerodha's business model is its focus on financial education. While many brokers focused purely on transactions, Zerodha recognized the importance of educating its users. In 2014, the company launched Varsity, a comprehensive educational platform aimed at teaching retail investors the ins and outs of the stock market. Varsity is completely free and covers a wide range of topics, from the basics of stock market investing to more advanced topics like derivatives and options trading. The platform is designed to be accessible to everyone, regardless of their level of experience. By educating its users, Zerodha aimed to create a more informed and confident investor base, which in turn would lead to more engaged and active traders. This focus on education wasn't just about building trust. It was also a smart business move. The more knowledgeable investors became, the more likely they were to trade more frequently, which benefited Zerodha's flat fee model. Varsity became a key pillar of Zerodha's strategy, helping to differentiate the company from its competitors and build long-term loyalty among its users. Zerodha's commitment to financial literacy went beyond Varsity. The company also hosted webinars, conducted workshops, and partnered with various educational institutions to promote financial awareness. By investing in education, Zerodha not only empowered its users, but also contributed to the overall growth of retail participation in India's financial markets. This emphasis on education helped Zerodha create a community of informed investors who were more likely to remain loyal to the platform. It also reinforced Zerodha's brand as a company that cared about its users' success, rather than simply profiting from their transactions. Over time, this approach paid off, as Zerodha built a reputation as a trustworthy and customer-centric brokerage. In 2024, Zerodha reached an impressive milestone, Indian rupee 320 crore, $1 billion in revenue, a figure that solidified the company's status as a financial powerhouse in India's rapidly evolving fintech landscape. This achievement wasn't just a reflection of smart business practices or a temporary surge in market interest. It marked a turning point for India's retail investing community, demonstrating that a company could build massive success by prioritizing transparency, affordability, and innovation. Zerodha's path to $1 billion was, in many ways, the result of a perfect alignment of market conditions, strategic decisions, and a rapidly growing retail investor base. Since its inception in 2010, the company had positioned itself as the brokerage of the people, offering unparalleled access to financial markets through its flat fee trading model. This decision attracted millions of users who were previously deterred by high commission fees and complicated pricing structures. Zerodha democratized access to the stock market, empowering everyday Indians to participate in wealth-building activities that were once reserved for the financially elite. But this rapid growth wasn't accidental. Zerodha's business model was designed with scalability in mind from the very beginning. By focusing on a digital-first approach, the company was able to serve millions of customers without the need for a large physical footprint, a strategy that helped it minimize overheads while maximizing its reach. Zerodha's low-cost structure, driven by its efficient use of technology, meant that the company could grow its user base without incurring proportionate increases in operational costs. This scalability was critical in helping Zerodha reach its $1 billion milestone, as each new user contributed directly to the company's bottom line with minimal additional expenditure. Additionally, the company's ability to generate high trading volumes played a significant role in its success. As more retail investors flocked to the platform, daily trading volumes surged, allowing Zerodha to generate consistent revenue despite its low fees. This volume-driven model was a departure from the traditional brokerage approach, where fees were charged as a percentage of trade value. Zerodha's model ensured that it could maintain a steady flow of revenue regardless of market conditions, while its competitors continued to rely on variable, often unpredictable, commission income. Zerodha's leadership was instrumental in guiding the company through its growth. Nitin Kamath, the company's founder and CEO, emphasized the importance of long-term sustainability over short-term profits. This focus on building a business that could withstand market fluctuations helped Zerodha avoid the pitfalls that many fast-growing startups face, namely, overspending on customer acquisition or relying too heavily on venture capital. In fact, one of the most remarkable aspects of Zerodha's journey to $1 billion is that it achieved this milestone without raising any external funding. This was nearly unheard of in the fintech space, where aggressive growth is often fueled by rounds of venture capital investment. Zerodha's organic growth was largely driven by word-of-mouth referrals and the company's stellar reputation for customer service. Instead of spending heavily on advertising and promotions, Zerodha let its platform speak for itself. Satisfied users recommended the service to their friends and family, and the company's user base grew exponentially as a result. This approach not only kept customer acquisition costs low, but also fostered a sense of community and loyalty among its users, who felt a personal connection to the brand. In addition to its core brokerage services, Zerodha expanded into other areas of financial services, which contributed to its growing revenue. The launch of products like Coin, a platform for direct mutual fund investments, and Funhouse, an asset management initiative, added significant new revenue streams. Zerodha's foray into insurance distribution through Ditto also helped diversify its income, ensuring that the company wasn't overly reliant on trading volumes for its financial success. This strategic diversification, combined with a relentless focus on technology and user experience, allowed Zerodha to achieve its $1 billion milestone while maintaining a 56% profit margin, one of the highest in the industry. As Zerodha looks to the future, the company's challenge will be to continue scaling while navigating the increasingly complex regulatory landscape. However, with a solid foundation built on trust, innovation, and customer loyalty, Zerodha is well-positioned to maintain its leadership in India's fintech space for years to come. Despite its success, Zerodha is facing increasing regulatory challenges. In 2023, the Securities and Exchange Board of India, SEBI, introduced new regulations aimed at increasing transparency in the brokerage industry. One of the most significant changes was the introduction of the True-to-Label rule, which requires brokers to clearly disclose all fees and charges to their clients. For Zerodha, this rule has the potential to impact its revenues significantly. Under the old system, Zerodha benefited from a volume-based charge structure, where it paid lower transaction fees to stock exchanges based on the high volume of trades it processed. SEBI's new rule will force Zerodha to pass these savings on to its customers, potentially reducing the company's revenue by up to 10%. Another regulatory challenge comes from SEBI's proposed changes to index derivatives trading. If these changes are implemented, Zerodha could see a further 30 to 50% decline in revenue from this segment. This is a significant concern for the company, as derivatives trading accounts for a large portion of its total trading volume. In response to these regulatory challenges, Zerodha has been proactive in exploring ways to mitigate the impact. The company is diversifying its revenue streams, investing in new products and services, and continuing to focus on customer education. By staying ahead of the curve, Zerodha hopes to maintain its leadership position in the market, even as the regulatory landscape continues to evolve. Nitin Kamath has acknowledged that these regulations present a real challenge for Zerodha, but he remains optimistic about the company's ability to adapt. He has emphasized that Zerodha's long-term success will depend on its ability to innovate and stay true to its core values, regardless of the regulatory environment. As Zerodha's core brokerage business continued to grow, the company recognized the importance of diversifying its revenue streams to mitigate risks, especially in light of upcoming regulatory changes and market fluctuations. One of the most significant areas of diversification for Zerodha has been its entry into asset management and insurance, two sectors that complement its existing offerings while providing additional revenue stability. In 2017, Zerodha launched Coin, a platform that allowed users to directly invest in mutual funds without the involvement of intermediaries. This was a significant step forward for Zerodha as it opened up a new market for the company. Coin's fee-free structure, where users didn't pay any upfront or hidden charges for their mutual fund investments, made it an instant hit with retail investors. Zerodha's decision to absorb the cost of commissions typically charged by intermediaries was a bold move that reinforced its reputation for prioritizing customer interests over profit maximization. By the end of 2023, Coin had attracted millions of users, many of whom were already using Zerodha's brokerage services and were eager to consolidate their investment portfolios on a single platform. But Coin was just the beginning. Zerodha soon expanded further into asset management with the launch of Funhouse, a passive asset management company focused on providing low-cost, passive investment products like exchange-traded funds, ETFs, and index funds. The rise of passive investing, which aims to match the performance of a market index rather than beat it, was gaining momentum globally, and Zerodha capitalized on this trend in India. By the start of 2024, Funhouse was managing over 3,000 Indian rupees crore in assets, providing Zerodha with a significant new revenue stream. Passive investing is especially attractive to retail investors due to its lower fees and relatively stable performance compared to actively managed funds, making Funhouse a natural extension of Zerodha's mission to democratize finance. Zerodha's foray into insurance distribution was another crucial aspect of its diversification strategy. Through its partnership with Ditto, one of India's leading insurance distributors, Zerodha entered the insurance market with a focus on transparency and customer education. Ditto offered a range of insurance products, including health and life insurance, through an online platform that mirrored Zerodha's commitment to simplicity and affordability. Unlike traditional insurance brokers, Ditto provided detailed, jargon-free explanations of each product, helping customers make informed decisions about their coverage. By entering the insurance space, Zerodha tapped into another massive market in India, where insurance penetration remains relatively low compared to global standards. The company's approach to insurance mirrored its strategy in brokerage: eliminate complexity, reduce costs, and empower the customer. Ditto's success was driven by a customer-centric approach that focused on making insurance more accessible and understandable for the average Indian consumer. Zerodha's expansion into asset management and insurance was not just about diversification. It was about building a comprehensive financial ecosystem. By offering a wide range of financial products, Zerodha could deepen its relationship with its users, who now had multiple reasons to stay within the Zerodha ecosystem. Whether it was trading stocks, investing in mutual funds, managing their portfolios passively, or purchasing insurance, Zerodha became a one-stop shop for India's retail investors. This strategy of cross-selling financial products also had a significant impact on customer retention. Users who started with Zerodha for their brokerage services were more likely to stay on the platform as they expanded into other areas of their financial lives. This not only increased the lifetime value of each customer, but also helped Zerodha build long-term loyalty among its user base. As of 2024, Zerodha's diversified offerings have become a key driver of its financial success, contributing to its 8,320 Indian rupees crore in revenue. By expanding beyond brokerage into asset management and insurance, Zerodha has positioned itself as a comprehensive financial services provider, capable of serving the diverse needs of India's growing retail investor community. In addition to its financial services, Zerodha has also expanded into media. In 2023, the company launched the Zerodha Network, a media platform focused on financial literacy, investing, and entrepreneurship. Through YouTube channels and podcasts, Zerodha has built a community of financially savvy individuals who are not only users of their platform but also advocates for their brand. The Zerodha Network has quickly gained traction, with its YouTube channel accumulating over 300,000 subscribers in its first year. The content produced by Zerodha is not just promotional. It is educational and designed to provide real value to viewers. By focusing on quality content, Zerodha is able to reinforce its commitment to financial literacy and build deeper connections with its audience. Zerodha's media expansion is part of a broader strategy to engage with its customers beyond the trading platform. By producing high-quality, informative content, Zerodha is able to keep its users engaged, build brand loyalty, and create a sense of community. This has been particularly important as the company faces growing competition from other brokers and fintech startups. By positioning itself as a thought leader in the financial industry, Zerodha has been able to differentiate itself from competitors who focus solely on transactions. The company's media efforts have also helped to educate the broader public about the importance of financial literacy, furthering its mission of democratizing finance in India. As Zerodha looks to the future, the company's strategy is focused on three key areas: technology, diversification, and regulation. On the technology front, Zerodha continues to invest in improving its platform, with plans to integrate AI and machine learning to enhance the user experience. By staying at the forefront of fintech innovation, Zerodha aims to maintain its competitive edge in an increasingly crowded market. In terms of diversification, Zerodha is exploring new business opportunities beyond brokerage, asset management, and insurance. The company is also looking at expanding its media presence and developing new content platforms that can further engage its growing community. Finally, Zerodha is preparing for the regulatory changes that are on the horizon. While SEBI's new rules may impact revenue in the short term, Zerodha's leadership is confident that the company's diversified business model will allow it to navigate these challenges successfully. By focusing on innovation, customer engagement, and product diversification, Zerodha is positioning itself for long-term success. As the financial landscape continues to evolve, Zerodha's ability to adapt will be critical. Nitin Kamath has emphasized that the company's mission will remain the same: to democratize finance and empower retail investors. This mission, combined with a focus on technology and innovation, will guide Zerodha as it navigates the challenges and opportunities ahead. Zerodha's impact on India's financial markets cannot be overstated. The company has not only revolutionized the way retail investors participate in the stock market, but has also set new standards for transparency, affordability, and customer service. Zerodha's flat fee model forced competitors to rethink their pricing structures, and its commitment to financial literacy has empowered millions of Indians to take control of their financial futures. But Zerodha's legacy is more than just about disrupting the brokerage industry. It's about changing the culture of investing in India. By making the stock market accessible to the masses, Zerodha has played a key role in increasing retail participation, which has, in turn, helped fuel the growth of India's financial markets. As the company continues to grow and evolve, its legacy will be one of innovation, empowerment, and a relentless focus on putting the customer first. Zerodha's journey is far from over. As it looks toward the future, the company is preparing for the challenges and opportunities that lie ahead. But no matter what happens, Zerodha's place in India's financial history is secure. It has changed the way Indians invest, and its influence will be felt for years to come. Whether through its innovative business model, its commitment to education, or its leadership in Fintech, Zerodha has left an indelible mark on India's financial landscape. So, what do you think? Can Zerodha maintain its dominance in the face of regulatory challenges, or will these new rules force them to rethink their approach? If you enjoyed this video, don't forget to give it a thumbs up, subscribe to the channel, and hit the bell icon so you never miss an update. Check out the videos on your screen for more insights from the world of technology and finance. This is the AI Lib. Stay tuned.